This kid thing does keep you busy. I'll tell you what, Drew, you've got a bit coming up ahead of you, mate. Hi, everybody, and welcome to your Trading Export. Hey, everybody, and welcome to your Sunday Market Update live with us right now. We're going to have a look at this market and get through it with a number of different experts as they dive into the market and see if they can pass on some wisdom and some understanding for you guys. First up, as always, will be Julian, who's going to have a look at the macro stuff. We'll have Alexis in for fundamentals. We'll have Ash in for data. We'll get into gold with Ainslie. We'll get into crypto with Shukri. We're going to oil back with Ainslie. We will have Lloyd come in and do currency overview. He'll look at it like from the dollar index, but everything's indexed, and talk about how they're working, how he uses that to trade profitably. And Geoff will come in and give the technicians 2 cents worth later in the session. So it's going to be an amazing 45 minutes or so. So jump in, enjoy it, and learn as much as you possibly can. See if you can find a few directions for next week. I've got to say, Julian, I put this on record last week. I think it's been the worst 2.5 weeks of market as a trend trader I've seen since about September 2015.
I'm going to struggle to argue with you on that one, Paul. I think that, so two things happened last week when we look back at last week, right? We had the breakout, if you like. Can we say the US dollar rally? And I'm going to call that the beginnings of a breakout. And closes above multi-day closes, looking like it was going to go higher. And then non-farm payrolls came in, and they came in, well, I'm going to say about on target. Although that these days, if you miss by 100,000, that's about on target. Oh, how the world has changed. Despite the ADP report earlier in the week showing an initial claim showing a much bigger uptake. So look, I think what was really interesting about that was that we saw the bond market rally a little bit. Yields came off a fraction. We also saw, as a result of that, a rally back in gold, a rally back in oil. Oil kept on going higher. And for the currencies, if you like, I hate using the words risk on and risk off. So let's just say the US dollar had a bit of a rough day. Having started out on Thursday with a possibility, a strong possibility of a new direction. That was not quite almost totally reversed, but pretty much most of it was reversed on Friday. So where does that leave us, right?
Mate, one final thought before I fully pass to you, mate. Hasn't it been 2 weeks where every time you get in a direction, it doesn't go that way until you stop, and then 3 days later, bang, it's on its way. And it's just been hard to pick up the right signals and hard to pick up the direction. Mate, I'm only making some chat. Let's hear some macro expertise from you, mate. Over to you.
Yeah, look, and you've nailed it, Paul. And I think, look, this is the key problem. But we go through times like this, right, folks? This isn't the first time the market's got a bit more abundant. It will not be the last. I guarantee you that. If you're a trend trader, you had it pretty good in November, December, Jan, Feb, and then the market since then has quite a few of the currencies just gone sideways, right? So when we're looking about interpretation, last week we had this conversation about the 3 main themes. I'm just going to remind everybody about those one more time, right? So number 1, government spending. Number 2 is the inflation rate and all the hullabaloo about inflation. And number 3 is the pandemic and the changes that are going on there. There's different rates of change of the pandemic and declines and increases all over the planet in different places in different ways. So where I think it's really important, and I continue to stress this, is if you're going to have a view on the fundamentals, the view on the fundamentals will have to be how you'll have to have a view on those 3 things, because those 3 things will drive the outcome of the markets going forward. And that will give you, if you like, a little bit of a trading edge to either trade more aggressively perhaps, or to be more hopeful about and express that through your trading around the trades that you have in a particular direction. So at the moment, when I'm looking at this, I continue to see the Citibank Economic Surprise Index in the markets across the world underperform. I.e., what's going on with that is economists are being are now in the space of over predicting what's going to happen on the good side, right? They said, it's going to be 1 million people will have found work last month. Well, actually, it turns out to be only 500,000 or 600,000, right? And So this surprise now is hitting the negative category. So we've had 3 or 4 months where the Citibank Economic Surprise Index has been in the positive camp, in positive territory, and now pretty much around the world it's moving into negative territory, which is a very interesting thing. So when we talk about rates of change, what I mean by this is why this is important, right? Now, why is it important? Because when you think about what's in the market already, is what those economists have been telling all their customers, right? So when there's a surprise to the top side, you can construct an argument that the world is doing better and therefore stocks should rally, gold should rally, oil should rally, things should go up, right? Because they're in more demand when things surprise to the upside in the economy. The flip side is when things are starting to surprise the downside of an economy, it wouldn't be too far to reach to say, actually, maybe the opposite needs to start happening. So again, caveats everywhere because, we're traders. We've got to trade it as we see it. When that starts to find its way through to the marketplace, because right now I don't think it's being discounted. But what is happening is the dollar is pausing, or these markets are pausing, right? They're seeing that surprise go in the opposite direction. They're going, oh, well, now I need more evidence that my thesis is correct, right? The governments will still spend money, inflation will still rise, and the pandemic will get better, right? Fewer people infected and lots more people recovering, more vaccinations and all that stuff. So when you're thinking about this, what's really important within all of this is to try and think about those three things, the rate of change that's going on, and then what's that doing to the market. So here's the thesis, right? Until we have a significant shift on the liquidity fronts from governments, I suspect that we are going to continue to see the US dollar probably trade poorly. So here's the thing, right? We need to keep an eye on that liquidity. Now, how do we do that? Well, there's a number of different ways. You could look at inflows to stocks. You could look at the savings. You could look at the treasury balances, the government balances, the US federal government balances at the treasury and things like that. There are ways to measure that liquidity and have a keyword, right? Have that keyword on Google and just keep looking up liquidity and see what it says, right? What you're looking for are clues that says something has changed. Until something changes, the world is still spending money. The world will carry on with the existing trends in one form or another, and I would expect us to continue for the Australian dollar to possibly continue to rally, and for the Canadian dollar to head towards that 118 level we all think it ought to get down to. And all of those things will continue to happen, right? But if it's going to reverse, if we're going to have a change, then what that change is going to come is going to be in the subtlety. It'll be in that rate of change. So the government stops spending as much, right? More people get vaccinated, or it slows down, right? The Asia rise in the Asian rise in infected cases gets worse, right? Not just talking India now, but Indonesia, Malaysia, Vietnam, Korea, they've all got a rise in cases going on at the moment, right? So we need to be on top of that as well too. Is that going to get any worse? Don't forget who makes the world's stuff, right? It's usually made by most of those Asian countries. So these things are quite important. Keep an eye on them. Back it up with the technical picture you're seeing in the charts and get out there and trade it. But in the meantime, if you're not sure, you don't see what's going on, and as Paul says, it's a quiet time and the markets are sort of going sideways, understand that two things are going to happen. If you continue to try and trend trade, in all likelihood, your performance isn't going to be that good. But that's sometimes the price you pay for continuing to ply your trade in the marketplace. If you have a range following system, you absolutely have to maximize, right? Range trading right now, you've got to maximize those results, because while it's doing this, you might not have the time to do that at a later stage. So that's really sort of where I sit with all of this. No real key changes at the moment, but we're watching really closely that US government spending. And stop hearing about all these dream numbers and wait till we actually get something written on a bit of paper is my advice around this. 4, 5, 6, 7, who knows how many $1 trillion the Biden administration is going to spend. And actually, quite frankly, nobody really cares. What people care about is what the expectations against the actuality is, because that's far more important to markets. One last point I will make. The bond market I respect in the same way that you respect the best trader that you've ever seen in your entire life. Okay, the bond market needs to be treated with respect. Right now, with bond yields at 1.5% in the 10-year and falling as they were last week, right? Do they believe in inflation? I'm going to leave you with that question. Thanks, Paul. That's it for me.
Cheers, Julian. Interesting times. Looking forward to next week. I just get the feeling that every week we come back here and talk about different things, and sometimes the market's performing in a way where the macro view is just really clear, and sometimes it's just a bit more confused and a bit harder to follow, and just takes a minute and this kind of stuff. You just keep listening every week, guys. See if you can understand the language and see if you can understand the theme, see if you can understand the thesis. The more you do it, the more you'll get it, and the more you get it, the more money you'll make. And look, there's no magic formula here. It's like anything else. You start at the start, you end at the end, and in the middle is turning up every week and getting better at it. So thank you very much for it, mate. At the end of the day, it's masterful. Thank you very much for it. Much appreciated.
Hey, one last point. Sorry, if I can just jump in. So Lewis has asked a question. Am I okay to answer this?
Yeah, you are. It's fine.
Yeah, look, so Lewis, the interesting thing about non-farm payrolls is don't worry about the month-to-month changes, okay? What happens is the economists try and guess those month-to-month changes. Sometimes they get it right. Most of the time they get it wrong. That's just the way life is. What's really important is what those changes are on any one particular month. Sometimes they revise the figures from last month a little bit up, a little bit down. Most of the time those revisions aren't very big, but what we're seeing right now is massive volatility in those numbers. Last month we had 250, 270 something, I think, for non-farms. They're expecting 1 million, right? This time it was meant to be 600,000 and they got 550, I believe. I can't remember the consensus, but they were lower again, right? This is really odd. There are strange things happening, but at the end of the day, yes, you're right. Double the number of people got employed last month compared to the previous month. But this just goes to show how volatile these numbers are, and actually how bizarre it is to try and figure out what those numbers are going to be each month. I think it's a complete crapshoot. I have no idea how anybody knows roughly what the numbers are. I think they're just making them up. So the short answer is look at what the economists are predicting, and then see how the markets react to the change. That's the key message.
It's fascinating, isn't it, Julian? Sometimes I consider non-farm payrolls to be the biggest non-event in trading. They can go 6, 7, 8, 9 months where nothing happens, right? And then all of a sudden there's a bit of pressure on and they start getting those numbers badly wrong, and all of a sudden it's back just running the market for a period of time.
Yeah, look, and for those of you who've been with me for a while and listened to some of my speeches, I talk about lagging, leading, and coincident indicators. Unemployment is a lagging indicator. When you hire people in a business, okay, you are not hiring people in expectation of work that's going to arrive. You've already got an overworked staff. That's why you hire people, right? Because you've got too much work already, which means by definition it's a lagging indicator, right? What would be better is to look at what the factory orders are and what the PMIs are showing for all those industries. That's a leading indicator. Those are the ones we should be thinking about if we're looking for economic direction.
It's interesting, isn't it? Because unemployment, they're seeing that go in one direction, they're expecting unemployment to follow, and it's not. And it's just freaking them out a little bit, right?
Totally.
Cheers, mate. Thank you very much. As always, we will see you back next Sunday night, mate. Thanks again for your input, as always. Next, we're going to go and go for the macro market overview. We're going to go and have a look at some fundamentals. Alexa, it's a big day for you presenting a program all day today. Thanks for turning up and sharing with us. What have you got for us as far as fundamental view for today?
I think really interesting stuff that Julian shared kind of mirrors where I am with the US dollar. And I'm just going to flash a couple of headlines to show you where my head is at. So what's been interesting is a couple of headlines that have popped out. I'm just going to flash you guys some of the headlines, and then we'll have a chat about it. So first thing that caught my eye over here was a China boosts measures to cool the renminbi rally. As you guys know, I've been looking at China as a proxy. I mean, it is the second biggest market economy in the world right now, right? So we should keep our eyes on it. So that's where one of my eyes is on, and it is looking to, I think, push down, or probably, I think the renminbi has been very high, is been very strong over the past couple of months. So China is doing something. Apparently, they are using measures not used since the global financial crisis to keep a hold on their currency. So this is something interesting that it has popped up. Another China side news: Mario Draghi sets a tone in cooling EU-China relations. What does this mean, right? What does this mean for investments in the euro from China? What does this mean for investments in China from the euro? What does it mean? Are they aligning themselves with the US? Is a Sino-Italian unraveling, what's happening over there. There is something happening. I'm not sure what, right? But these are the tones or the news that are coming up. And then we have over on CNBC, we have a couple of headlines that caught my eye. Even if the US jobs report is strong, the Fed won't turn hawkish, all right, question mark. And again, it goes, I think, a little bit of an eye on when will the Fed increase interest rates? Are we really still focused on unemployment? Will the interest rates pop when unemployment is better? All right, so this is the jobs report, right? Unemployment, question mark. And then, of course, we have another CNBC article. Okay, this is a repeat. Let me see, where is my other CNBC article over here. Okay, Russia to remove dollar assets from its wealth funds. All right, so Russian finance minister, this is the 3rd of June, so about 3 days ago, says that his country's national wealth fund will exit dollar assets and instead invest in the euro, the yuan. All right, I'm interested in this because the yuan has been mentioned, and of course gold assets. Again, question mark. So there is something happening in the markets. What we are looking at is we are looking at movement of money, right? So movement of money, the big players are trying to figure out where to put money. They're figuring out how to move stuff around. So over at the top, I'm just going to start from the top of the first article that we looked at. China USD, right? China USD. So China is using unprecedented measures to push down the strength of the yuan. Will this work? Now again, of course, we always combine the fundamentals with technicals. My eye would be one question mark on the news that came up, and my next one will be, all right, if they are really going to push down the renminbi, will we then break below this previous horizontal level over here? Now, will something change, right? And will we break below this level? So of course, I will be interested to see whether next week anything will result from that news, whether or not something will happen from the renminbi side, right? And of course, with the renminbi, I am again connected to the Aussie dollar, and let's take a look again at the Aussie dollar. All right, we have the Aussie dollar in a very sideways question mark. Again, it's trying to figure out where to go. Very clear. You can see it, nice horizontal level over here. Okay, price is kind of breaking down, but I would say still pretty much sideways. It is trying to break below, and we will see again next week if the China news will give us the push that we need to weaken the Aussie a little bit further to the next level below. So a little bit of technicals coming in. So I am interested to see how this will play out over the next couple of weeks. I digress a little bit. I think I found something might be interesting would be over here. Now, as you guys know, there is a lot of government money being spent, right? A lot of government money being spent over the COVID period, where governments are trying to inject funds into their own economy to help the local people, help businesses, etc., etc., etc. And what we will have seen over the past couple of months is the government budget has spiked. All right, so I give you an example is the US didn't spike as much. All right, they are still pretty okay. It's just negative 4.6%. But what is interesting is countries like Japan, you can see minus 3% is spiked to minus 10%. All right, in their budget spending. What I am interested in is the UK, because I don't know how they went from minus 2% to minus 16%. They are spending a lot of money somewhere. Probably in trying to fight the virus. We are looking at Canada also from a minus 1.5% all the way to minus 15.9%. Again, they must be spending money somewhere to kind of fix the COVID issues. Then we go on to places like Australia. Money still not too bad. I would say it's just minus 4%, all right, compared to the minus 16 in the pound and the minus 15 in the CAD. All right, and then we go to places, let's come a little bit closer to home, to Singapore. Okay, Singapore, again, minus 13%. You can see almost a big chunk of money being spent. Again, it must be the free vaccines that we're getting. I'm sure these all cost money, the PCP test they're getting. So all these countries are spending money in getting their country recovering, right, from the COVID. So what that translates, what actually interests me, it's the person that spent the most money, or the government that spent the most money will be UK. Okay, UK minus 16%. So if you click into the news, you can say Britain's government hit a peacetime high, all right, of 355 billion, or 16.9% of GDP in this fiscal year, amidst efforts to support businesses and households that has been hit by the pandemic. Now, that's a lot of money, right? 355 billion that is out there. So my question then is there something we can do with the pound? So I'm going to peek at pound dollar. And let's see where the pound is at. Let's add a little bit of technicals down there. All right, I'm going to erase my previous bars, and let's put a new line over here at the top. and think about it. All right, so we have a bunch of consolidation happening in the pound. Now, my bias just from looking at the deficit is I'm not really inclined to go long on the pound. So my focus for the next week is to see whether there is going to be a shakeout and whether or not the pound will push off. But again, one eye on the US dollar. I do believe the US dollar is still consolidating. There is really nothing exciting pushing it over that. So I'm afraid this might only, I would say this pound weakness might only come after a couple of weeks. We are probably going to see a very nice range bound sideways motion for there. Maybe traders like Geoff or the range traders will be able to take advantage of that. But I am going to be waiting for the pound to weaken. All right, I'm going to be waiting for the pound to weaken because overall on a bigger time frame, I am still slightly more bullish on the dollar. All right, peacetime. I'm not really pro Biden, but I feel that with a little bit of stability, we should have some sort of push up in the dollar. It might not happen in the next 2-3 months, but I am definitely having my eye out on a slightly bullish dollar over the next couple of months. But again, we are trading what we see on the markets. And again, I like trading the US dollar Sing because it's closer to home. Now, whatever gains that we got on Thursday wiped out on Friday. So I am going to sit on this and see whether it comes back and retest this low again. Because very simply, I know the MES regulates the Sing dollar, regulates this dollar Sing strength. So I'm just going to wait and see whether we get another possibility to enter over here. So what I am looking for in the next couple of weeks is potential pound consolidation. But if pound pops towards the downside, I am going to make sure I'm catching that. I'm going to look for midterm dollar strength, specifically dollar Sing. But overall, I think a dollar is still consolidating as well. Nothing interesting is coming up from the dollar. My great interest is still in the Aussies. Okay, with the news of the renminbi being pushed down, the Aussies are at some of the Aussies are very interesting levels. All right, if we go to the Aussie dollar, it is at a very interesting level. I want to see whether or not this will pop the Aussie back down below the line over here and follow the weakened renminbi. All right. Last thing I want to talk about is the CAD. A lot of things to look at because yes, I'm back in trading, and we recently last week had a declaration of an additional 5 million worth of barrels of oil. I think based on over here Forex Factory calendar. Last week we had a oil number that come out, and over here, so crude oil inventories was at minus 5.1 million. Okay, so average about 15.6 million barrels. Now, this is an interesting figure. Now, my question is, what will this do to oil prices? I'm not an oil trader. I'll leave it for Ainslie to trade it. But what I am interested is to see the Canadian dollar's reaction to this move. So keeping an eye out on opportunities on oil. Direction, I'm not too sure. I'm going to wait for Ainslie and see what she says. That's all for me today, Paul.
Thanks, Alexis. Interesting stuff as ever. So we've gone through the macro markets, we've gone through the fundamental look at the world, and now we're going to have a look at data. Where's the data driving us this week, Ash? I do feel in markets like this where really I don't think there's a lot else to look at. The data starts to become a little bit more important.
Yeah, maybe so. It's interesting, really, when we look at which ones have had the major movements, and I suppose in some respects, the data does become important because what it's kind of telling us is that there's a real lack of commitment right across the board. There's nothing that is hugely extreme. In fact, there's very few things that are hugely extreme. When we look at the CAD, which is the currency that I'm going to focus on this week, we do see that there's a big downtick in the buying. So the index has fallen to zero. Not many of them are in the same kind of place. Last week we were looking at the pound, but that's had a very small uptick, from last week's measures. This week we're seeing that there's weakness in the CAD. So let's have a quick look at the CAD and see if we can get any kind of information that would suggest that the downtrend in the CAD would continue, or if I should really say, is there a trend in the CAD that could start now moving to the downside? If we look at the commercial change, we don't really have, it's absolutely in balance. 9% long from last week, 9% short from last week. But because the index is right at the bottom, and it's really the only one that is flashing 3 years of negativity, a year and a half of negativity, and 6 months of negativity. So it's the most obvious one for us to look at. And I suppose the point that I was really making earlier is that to only have one is not really too helpful in many respects. You know, I'd much prefer to see a basket of things that were all negative and the dollar, you know, nice and strong, just to give us a little bit more clarity. But you can see here's the index. So we're seeing it down at 0. This is the significant aspect here. I'm just going to take the net levels off. The shorts have really started to come in. And if we think about this on a historical, as a historical level, look right back here, and we haven't seen this kind of shorting in the CAD since 2017. And if we look at the price action, this is what ended up happening. So this is a real flag for the CAD, you know, and as I say, maybe it's a bit of a shame that there's only this one, but maybe it helps us just focus our mind a little bit more. I think what Alexis was just saying about oil was quite interesting, because we've seen the oil market rally, but if anybody knows what happened to the CAD on Friday, the CAD had a huge sell-off after those employment numbers from Canada and from America. So that is also sending off alarm bells. You know, it's telling us that there might well be a currency to focus on if the anticipation of the Fed not raising interest rates or having a more hawkish stance just doesn't manifest itself. And that's really what we're looking at. You know, there's this sense in the market that the Fed are going to do something. And we've seen it with stocks. People taking profit with stocks, but every time we get the next piece of data that could add to the puzzle that would encourage the Fed to do something, it's really against that particular thesis. And if that kind of thing was to continue, then we may well see the CAD weaken. We might even see the dollar weaken as well. So if we look back here as well, historically, the other thing that is quite interesting here is that this was the last. This is almost like a double top here. This was the previous high in 2017. That we're back to that level again. We see this uptick in the selling volume here, uptick in the selling volume here. And that is really kind of telling us that that the Canadian dollar is probably the one to focus on for a short. Now, if we have a look at the seasonal aspect of this as well, the seasonality, if we go here to June, this is the line of June here, then we see that, you know, the first week or so, tends to be an uptick, but then we do see some downside, which takes us into around about the end of June, beginning of July kind of time. So, you know, none of this is going to be absolute. You know, we won't get a really clear timing aspect here, but it does suggest that, you know, moving into this week, we could see some further downside with the CAD. So going on what we've got, then the data is certainly suggesting that that if we are looking for shorting any particular currency this week and probably holding on to it for the next 2 weeks and potentially beyond as well, depending on how things change, is the Canadian dollar. So yeah, I would focus on that personally this week if I was looking to trade anything short. Picking what to trade it against is going to be the key. You may not want to go against the dollar, considering how closely correlated those two currencies are when it comes down to data. They can move in the same direction, which is really what we saw on Friday. So you maybe looking for something else to trade it against would be wise. But that would wrap that up, mate. So yeah, as an overview, Canadian dollar short.
Cheers, Nash. We'll watch that with some real interest. That may well tie into the oil and Alexis as well. Thank you for that, mate. Have a good Sunday in the UK. Nice sunny day over there, mate.
Oh, it's beautiful. Yeah, summer's kicked in now. It's been absolutely brilliant over here.
Enjoy Brighton Beach, mate. Take care.
Thanks, man. See you soon.
See you soon. Rightio, everybody. So we've had a look at the macro market overview. We've had a look at the fundamentals. We've had a look at the data. And now we're going to go to the golden girl, Ainslie, and talk gold. Ainslie, wasn't gold just gold last week? Didn't they just do the same kind of thing it does where, you know, this nice little consolidation, then bang down and bang back up?
Hello, gold. It's been a really interesting week because we were talking with Geoff on Trader Buddy show on Wednesday night, and he said, "Where do you think to with gold?" And I said, "Well, let's have a little look. We've broken out of this huge bull flag, taken off we've gone straight up, and everybody knows that I love gold to just go from A to B and go straight up. I don't want any of this retracement nonsense. So I said, but I need to be realistic. I'm expecting a retracement, and a retracement is something we got. I just didn't know how far that was going to come back, but certainly gave us a good, as gold has a tendency to do, a really good thumping on the retracement. So what did it do? It came down to have a look on the daily chart, by the way. Hello. Came down and said hello to the 20 EMA. So what a surprise. It bounced off the level that it just so really likes, which is around that 1554, I think it was, around that, 1855 level. And sat there for, you know, a good 8 hours going, well, what do we do now? What do we do now? We waited for the NFP numbers. It missed. It was a good miss. I love a good miss on NFP. I've had 2 happy Friday nights in the last 2 months. So, hey, happy dance there indeed. And off it took. And where it took us back to was back into this level. Back into a support resistance level, and I think it's going to sit there because what else is coming out this week? Thursday, 10:30 Sydney time, 8:30 Sing time, is CPI. So CPI is going to affect bond yields, US dollar, all that kind of stuff. So at the moment, bond yields, a bit of a flavour of the month, and it's following suit. And that's the thing. We did talk about this during the week, was what impacts gold? What is it inversely correlated to, or highly correlated to? And a lot of those correlations have broken down. So when the stock market rallies, that used to be gold would come off. We don't have that now. We're just not having that at the moment. When the gold rallies, dollar yen tends to be highly correlated. That isn't happening. That should have been selling off. It hasn't been happening. So just be careful of any of the correlated trades that we've been used to, because a lot of those relationships have broken down. Where to this week? Wait until, I think we're going to see a bit more of consolidation. We're back in that little nice box again. It seems to be their safety. And you know what gold's like. It likes a consolidation box. It's safe. It's happy. It's got a blanket. It's got a security blanket. And then we'll really be impacted to see what happens on Thursday CPI. So 4 days of trading, it might just take off, it might go up, it might come back down again. But we had a beautiful bounce off the 20 EMA on the daily, off a level of support. That was good. Let's see where we go to during the week. Consolidation, I think, followed by let's wait and see on the CPI. CPI is really going to have an impact on gold.
Cheers, Ainslie. Yeah, I tend to agree with that very much. Gold is just gold, right? Consolidate then pop is very likely at some point here. Do like it. Okay, thank you very much for coming back to you to talk about the interesting. Oil has been one of the topics of the night, so we'll come back and do that with you in a few minutes. But first, over to Shukri to talk crypto.
Oh yeah,
Shukri, 36,191 for Bitcoin. Still not really taking off, is it?
doing the same thing for the past 3 weeks. Let me show you what it's doing. Same thing. I think we have a pattern here. Okay, so which is good. Okay, let's go to Bitcoin here. So once again, this is the 200. Still far away. We're still not out of this triangle. But look at this. Sunday, test support. Last Sunday, test support. This Sunday, test support. So this seems like the pattern. Sunday, test support. Go up, Elon Musk tweets. Go down, test support. So what will happen this week? Go up, Elon Musk tweet, test support, which is fine as long as we can chop up this level. Okay, so that's Bitcoin there. And I'm happy with that. Ethereum tried to break out, false alert because of the tweet. Just wait until these things resolve themselves. But there is massive action going elsewhere. First is the Polkadot ecosystem. You see here Kusama. It's going up because the new IDOs on Polkadot are going to start to be released, I think, next week. These are IDOs where you get your capital back after 48 weeks. So you don't, you will get your Kusama back if you put in Kusama in that. But what I really want to talk about, because we have a wallets class next week, which is free, is the new ones that are coming out for Polkadot and Kusama. You have to use another wallet. So that would be useful. But now the hottest thing in this universe is Solana. Okay, because Solana, as you see, is going up. And what happened last week is that they have, there was an IDO for a launch pad called Solpad, okay? So, you know, I've heard IDOs on Polkadot, you know, we started at, okay, the IDOs were filled out in 10 minutes, 5 minutes, 3 minutes, 1 minute. 1 minute was good. But the IDO on Solana, get this, on Solpad, which is one of the launch pads for Solana, was filled out in 1 second. 1 second. How do you do that? Because when I look like this, that's already 1 second, right? So, okay, come to the free wallets class next week. So we're gonna invite someone who actually managed to get this within 1 second. I don't know how to do it, but it just shows you that there is excitement. This is the next phase, you know, the new Polkadot, the Solanas, and nothing is happening on ADA yet, but that will come too. So many things to look at, many things to look forward to. Okay, Paul.
Cheers, Shukri. Thank you for that. And yes, free wallets course and how to set up a wallet and get some money here dropped into it course next weekend, isn't it, Shukri? Anyone that is interested in that should contact contact@actionswealth.com and the team will get you ready for the free program.
IDO in 1 second. See, taking my glasses off and putting back in is already 1 second.
Yeah, I'm not quite sure how you set an IDO. I guess what you do is just have a lot of people pushing a button at the same time, right? And the computers do the rest. And amazing somebody got in. Let's hope that we find a way for these IDOs to be spread around and more so more of us can get a chunk of them, right? It takes a bit of research and a bit of hard work to get them right now, right?
Yeah, it does. But it shows you that this is the thing about crypto, right? Because I already said this, every season things change. Something else is going to be hot. So it's obviously that the next round is going to be about Solana and later, I think July, August, ADA. That's it.
Really? Yeah, I've got a bit of ADA tucked away. So, Solano. Mate, they get some great names, don't they? Solano. It sounds awesome. Just quickly, why is Solana going to be the next one? What about it makes it the next one?
There's a lot of money behind it because the guy that is funding it is a crypto billionaire, and he was the second largest donor to President Biden's presidential campaign after the founder of Google. So this is a big guy, and there's just so much money going in there. It's much faster than Ethereum.
So what I'm taking from that is that crypto won't get banned in the US till after midterms.
Probably.
The money pours in for Biden, he'll let it continue a bit longer. Yeah. Cheers, mate. Thank you very much for that. Talking to you in 20 odd minutes with some investors as well. Looking forward to that chat. Ainslie, oil's been the topic of the night. Lots of discussion around oil. What's your take on it? Where's it going? Been another solid week.
To the moon, I think, as Shukri would say. No, seriously, we've had a really interesting look at this. We've had a really, after the IEA, the International Energy Agency decided that there would be no more new oil projects, and there were a few other things that they were tossing and browbeating about with oil and fossil fuels, and we're not going to be doing this after the 2021. And then OPEC just turned around and said, well, actually, no, actually, we don't agree. That's not what's happening. We're still going ahead with our projects. The faith was restored back into the oil markets, and it took off like you would not believe. There was a bit of a pullback during the week, and that was all to do with the US-Iran deal and sanctions and a few other bits and pieces. Didn't quite go according to plan, but never mind. Regardless, the big thing on Thursday, as Alexis has pointed out, there was the inventory count was minus 5.1 million barrels. What that actually means is the OPEC producing countries have restricted supply, and that pushed obviously demand up because they're keeping a handle on the supply, handle on supply, restricting or containing the production of oil right across, with a few other, little curveballs in there about a US-Iran thing that just isn't going well. And that's actually helped it to keep the supply down. demand's going up. And the other thing that obviously flicked it up was just the US dollar taking a nosedive, because WTI at the end of the day is against the US dollar. And that's what we had. Regardless, Brent also took a hike. We're heading towards 70. We didn't quite get there on Friday. I thought we might have hit $70. We didn't. We got close. We came up to 69, 70 odd. I was getting quite excited there. But we hit this weekly R2 and just came back and sat down and just sat at the top of this that consolidation area. So it's looking okay. Whether it keeps going, I think we're still in for a bit of a run on oil at the moment. Seasonally, yes, oil tends to keep going. As a adjunct offshoot, as Ash has said, we're looking at the CAD getting stronger. It's looking for a sell-off. So dollar CAD, when we're talking sell-off, we're talking about the CAD getting stronger against the US dollar. And if the US dollar keeps going down, we're going to see that oil is going to keep going up. It is just a seasonal bias as well. Not that it's an indicator. It's not an entry indication or anything like that. It's just a bias. At this time of the year, we do expect oil to rally as well. So with all those little fundamental things that have been happening, that have been going along as well, yeah, it's been a good week in the trenches for oil and gold, is all I can say. So yeah, I'm looking for it to continue on next week.
Cheers, Ainslie. Thank you very much. Yes, indeed. Looking for another solid week in oil. And I see something that's perhaps of all the stuff in the last few weeks been the most consistently directionally. There's been a lot of chop around, but oil has continued to do what oil does at the moment. Yep. Thank you for that very much, Ainslie. Next up, we've got Lloyd talking about indexes, currency indexes, and how he finds the strength in those, the dollar index, the Kiwi index, the Aussie index, cable index, you name it. He's going to have a chat about it and let us know how that would affect his trading decisions in the week ahead. Lloyd, are you with us?
Yep, Paul, here I am. So let me grab the screens. Okay. Right, so let me go through last week's trade. Last week I wanted to trade dollar Swiss short. Didn't set up for me. You see that immediately on Monday, price actually pops up and retested this level instead. Yeah, so something's going off issue with dollar, so I'm not too sure yet. Pound yen, yes, this is another trade I wanted to trade last week. You can see that price actually didn't break up. It tested the low of the box. It didn't actually give me a fake out, so I also didn't enter into this trade, fortunately. So on saying that, my alarms are ringing already. So from the previous week, I was actually down 1%. This week, now my trades got triggered and price is actually ranging. Yeah, so that actually is the alarm for me that possibly markets may be changing direction. So I will lower my risk. Now that's on my part. Now from the analysis side, let's look at it. Sorry, you should do this. Yeah. So on the analysis side, I'm still pretty bullish about pound. I can see that last week was actually a low test, but price is still indecisive. That explains some of the trades why it goes sideways. On saying that, not like price is changing, I'm still aiming for 144. Yeah, so pretty bullish about pound. Waiting for price to actually inch higher. So we shall see what will happen. The Canadian dollars, like always mentioned, that when price is near a horizontal level, especially a level that has been tested, no matter the trend, be very, very careful. Yeah. So price has actually for already 3 weeks failed to break for $82, $82.50. Yeah. So it doesn't mean that price is going to reverse, but just that you got to be very, very patient when price are near this level. You either need to wait for a clear pop, as in break and retest, or just don't enter the trade at all. Yeah. But I'm still bullish about CAD. I just need price to prove to me that either I'm right or wrong. When price is in this manner, not going anywhere else, be very patient. Swiss. Yeah. So Swiss is one of those currencies that I've pocket together with Kiwi and Aussie. Doesn't seem to be going anywhere, and I'm right for about 3 weeks already. You can see that price broke above. Just huge indecisive, but don't know where it's going, so I'd rather keep this out for the time being. Same as Kiwi, you can see that price, I've already boxed it. As long as it doesn't break this range, I'm not interested in trading. Aussie, I don't know how long this box has been in here already. Yeah, price just refused to pop. On saying that doesn't mean that it's untradeable, but for momentum trading, I think it's tough. For range trading, I think it's perfect. Now yen. So again, yen, we can see that incidentally, this is a higher low already. Yeah. So this will be, I'll be looking out for a two-way trade for yens. Yeah, I'm still bearish about it, no doubt. The overall cycles is still bearish. Yeah, but I'm paying great attention to any yen pairs, any currency that's paired yen for first higher low, that it may be possible for a change of trend. Yeah. Now, there's still possibility that yen might just go lower. In that case, it just needs to break. It just needs to continue the current cycle. Yeah, break and retest. That's the name of the game. Otherwise, a higher low might be in for advanced trading. Yeah, this is tricky, but definitely able to pull off. DXY, pretty similar to pound above. You can see that price has been hugging this level, tested 1, 2, 3. Doesn't mean that trend has changed. It just means that price is very hesitant at the horizontal level. Yeah. Always wait for price to go for a proper break and retest before we enter in. Now, this is the only currency that I achieved from last week. Euro was actually higher last week. Just at this week, it seems that price lower high, same. So you can see that this is actually a double top and also a lower high compared to the previous significant high. Yeah, a bit of bearishness has already come in, so I'm prepared to actually short Euro. Yeah, on saying that, the two pairs that I'm keeping a lookout for is actually, first thing is dollar CAD. You can see that it's really ranging. Yeah, so overall, it's still bearish. I'm just waiting for either a fake out and then I'll put in a short position or a classic break and retest. At this point in time, I wish to bring in Ash analysis early on, is that to be very wary about dollar CAD for the time being. I think he's looking for long. Yeah. So, and I'm looking for short. Then maybe very well that price is just going to range on. Don't know what happens. The next pair that I'm going to look to trade again is Euro Pound, a short position, either waiting for price to retest a trend line or a classic break and retest, and I'm going to go short. So that's it for me. Thank you.
Cheers, Lloyd. As always, thank you very much for that. We'll have a look next week and see how that has played out. And next, we're going to find out the technician's view, the technician's 2 cents worth, as Geoff likes to call his session. What's happening technically? What can we look at the technical picture? How important is the technical picture? Geoff, are you with us?
G'day, PB. I am indeed with you and keen to get into the market next week, because I think there's some possibilities that we can make some headway with. I'm not going to go into all of the ranging pairs, because there are quite a few of them, in particular the Aussies, the Euros as well, pounds. There's a lot of currency pairs ranging, and of course that's good news for me. I like to see that. But rather, I start my week, before I look at those ranging pairs, with this scenario where I'm looking for reversal bars, and reversal bars that actually mean something. You can see this week on Euro Swissy, or last week rather, that we had a false break of that little range there. It's not on a weekly, but on a daily basis. And of course, that's what we look for all the time, false breaks on box ranges. And that's what we got with Euro Swissy. Difficult to enter this until this bar and this bar turned up. So we actually did that, and we're in the short already on this. I like the prospects of this one going probably down to this level here. So this week, I'm still keen to stay with that particular bar that we were produced, or was produced for us. And I think this level here is quite attractive to us. So I'm sticking with Euro Swissy. If you're not in it already, then probably you're looking for a break of that little daily range that I saw there, and maybe even a retest, or even a break and a higher low. Anything like that, I think, is a selling opportunity on Euro Swissy. Very, very different chart on Euro Yen, but we spoke about Euro Yen last week, and I think we've been speaking about it for the last 3 or 4 weeks. And the reason I've been speaking about it is because of 1, 2, 3, 4, 5, 6, 7 now months in a row of bullish activity. All those bars are buying bars, and I don't think on any of the charts that you guys have got, maybe, no, I don't think you would actually. I really don't think you'll find a month in those last 7 where Euro Yen has in fact had any form of pullback on a monthly chart. I also don't think you'll find, and I don't care how far you go back, well, certainly on my charts, if you go back further than I can, then maybe you can find a sequence of bullish momentum such as we have seen on Euro Yen. 7 months in a row, to my mind, is unprecedented on my charts. Haven't seen it before. For that reason, I think that we're going to have a little bit of a respite in this big rally. The problem I've got is technically we've broken above this resistance. I'll call it a trade line because technically it's not a trend line. I also see, a big double bottom sitting here, and ultimately I think we're going longer here on Euro Yen. But 7 months, I've got to be looking to the downside. So finding that entry is going to be very, very tricky, but that will be my quest for the week. And we do have a nice little bearish engulfing bar there. We've broken through last week's weekly pivot. I think a nice little lower high in here might suit us. And if we do find that, I think I'll be willing to trade Euro Yen short. Of course, it is counter trend, most definitely, and counter momentum. But that I think would be an interesting position to take Euro Yen short. Not sure how much we'll get out of it, to be honest, but it is due a big retracement, as I've said. I'm sticking with the Swissy and the Yen as pairs to trade for or against. And the next one I'm looking at is Kiwi Swissy. That's the monthly chart where you can see we have started to rally here. We've broken a key level and we've come back and now retesting that key level, in my humble opinion. That's the monthly chart. The weekly chart has delivered to me a bullish reversal bar. Now that low is lower than the low of this candle, so it therefore qualifies as a key reversal bar for me. And then we've been delivered on the back of that an inside bar. That's a combination that I do like to trade. It's very, very difficult for me not to actually take that position. However, when I point out where the monthly pivot is, it becomes a little bit easier not to take it. I'm not going to say don't take that trade because of that level, because I will be taking that trade provided we don't get a massive gap in the market tomorrow. That will determine whether I will actually place this trade or otherwise. But I will be looking to place a trade above that bar, and I'll put my stop loss below it. I'm not even going to bother to put it below the swing, because if I'm wrong here, I'm probably going to be wrong there as well, and the market will continue to fall. But that will be my key for tomorrow. Kiwi Swissy long above that bar on a weekly chart. There may well be a far better opportunity to get into that if you're so inclined. In daily chart, 4 hourly chart, I certainly won't be looking for the 4 hourly chart tomorrow. I don't think we've got to get above this level, maybe up to the monthly pivot, and then give us a higher low. I think that would be a reasonable position to take. Now, Kiwi Yen is amazing because of that 7 weeks or 7 months in a row. And I find it very, very difficult to trade long against that. But I think my bias has to be long, but I just can't trade it. I can't trade it with that sort of statistic, if you like, the 7 months in a row going against me. I just can't get interested in trading this long at the moment. But I have got exactly the same thing here. I've got a key reversal bar and an inside bar. I'm going to ignore that one. You can see the difference in the charts. This one on the back of a retracement, this one right at the top of the market. I'm not interested in that one, although I'm sure that it can do it in terms of technical, and that's why we're here. That's what we're talking about. But I can't see how my mindset can say 7 months in a row is going to continue, and therefore I can't go along at that point. Aussie CAD. Aussie CAD, we've been very, very fortunate to get a good run out of Aussie CAD back to this level, and we trailed our stops pretty tightly as we saw this level approaching, and we are now out of that position. Now I see this as a buying potential, and I also have been delivered here once again a reversal bar at, in my opinion, a key level. Now, to trade that absolutely now is probably a little bit of a gamble, because really we've only had 2 phases of selling. So this could well go short again I'm tipping it won't, but that's not trading it, that's tipping it. I'd like to see a bit of a rally and a pullback to give us a higher low before I actually did get into that long. Big bullish engulfing bar there on Friday. Tomorrow, if we pull back, or tomorrow, Tuesday, even Wednesday, if we pull back to this level here and retest it, I think that would be an awesome place to get long Aussie CAD. Now, we've spoken at length about the CAD on the show today, and I would be absolutely tickled pink if Ash's analysis was correct. But I'd also like to see this come back to give us an entry point, maybe down there around about the 93 mark. So the 93 handle would be very, very interesting to me. I will be looking to trade Aussie CAD long, and it could go quite a distance, maybe back to the top of that range. We shall see. That looks incredibly interesting. Sure, Ash has had a look at this as well, and he'd get quite excited by what he sees there, the inverted head and shoulders. So for this week, that is my 2 cents worth.
Cheers, Geoff. Thank you very much for your 2 cents worth. Mate, some fascinating stuff going on in the market. I'm finding it for trend trading a bit tough, but you bring some charts up, look at them technically, they look super clear to me. Easy to
look,
follow.
I'm enjoying it, mate. Everything's going okay.
Mate, it's been going okay for you for a long time. Mate, thank you very much for that. Now, we are going to do a giveaway today. We're going to do a special giveaway today. We're going to give away the first seat on a new program we're running. It's going to be run on the 27th of June. It's a program on high reward, low risk automated execution. And we're going to have the CEO of one of the licensed funds in Australia come in and take us through it. He's a guy that specializes in automated trading. He's done it professionally he's had his own $60 million fund for a period of time. Now works for an organization out of Australia. We'll be introducing him to our people more in the next couple of weeks. But we're just finding out with him. Look, he's got a bit of a good reputation fundamentalist who works with him. We're just checking whether he can come and help in this program or not. The program will become run over a couple of half days. The first half day will be in the morning of the 27th of June. It is high reward, low risk automated execution. So how to make a good reward, how to have an idea and not have a robot trade for you. Just have a robot execute your idea for you. So it's not robot strategy. It's just, this is what I want to trade. This is how I want to trade it. Set it up, let it trade it. And these guys are absolutely minting it at this at the moment. Really great stuff. So we're going to run a course for that on the 27th. I can't even confirm to you what the price is going to be. It is that new. And we're going to have our lucky draw winner today. They are going to win the first seat on that. Now, if you've asked a question, you get to go in the draw twice. If you're on YouTube or Facebook and you want to go in the draw, just write your name into the comments now and I'll hurriedly add you in. I'll talk for another 30 seconds so you can do that. So if you are on Facebook and you do on or YouTube and you want to go in the draw, click in here. If you've asked a question, you get two cracks at the draw, and we're going to give away a very special prize. Look, guys, it's an amazing time for more opportunity comes across my desk at the moment than I've ever seen. Really incredible. And I think some of this stuff, some of this automated stuff, and not trading robots exactly, but there's some new ideas coming through, and it is looking extremely good. And I'm very much looking forward to having the guys come in and share this with you guys in a couple of weeks. So I would suggest jumping on to winning this. Is well worth the winning. I've got one new message. I'm asking a question. How's your day, Paul? Simon, me too. How you look? I'm good, thanks. My day's been brilliant, Simon. You know, what more do you want apart from 23 and 4-year-olds, 2, 3 and 4-year-olds running around a massive playground and eating junk food all day? It's been brilliant fun, and my voice is gone, nearly gone, you know. Cheers, guys. I'm not sure you're getting extra entries for that. Mai, you ready to go? Ready, let's do it, Mai. Let's have a winner, right? Who's going to win this first time up? High reward, low risk, automated execution. Here it is, the Wheel of Fortune. Here we go. I have not had someone type in the box, Crystal win. So Crystal cannot be here for this. Who is going to win it today? Who is going to win it today? There we go. Jason, if you're still in the room, can you write your name down and we will might organise you the first seat to that. If you're not still in the room, Jason, we are going to do. We did a redraw the other day, didn't we? It was great fun. Oh. Jason, are you in the room? Jason, you've got 10 seconds to tell me you're here. I'm going to do a redraw for this. Look, guys, I don't have a reply. Oh, I don't have a reply from Jason. So we're going to spin the wheel of fortune again. Mai, let's do it. Oh, hold on, what's that? Mai, let's go because I'm supposed to be in another meeting right now. If anyone's heading to that meeting, can you tell them that I'm on my way? Let's do it again. Let's see if we can find another one. Lots of good chances in there. Who's going to win it? Will it be Swee? Will it be Lionel? Will it be Jura? Jura would be good for you to win 1A, deserve 1A. New dad. How good is that, mate? Let's see if we can get Dominic. I think Dominic's in here. Dominic, are you in the room? Yeah, man. Super cool, buddy. Well done. Congratulations. I'll pass the details on to James, and James will be in touch Monday or Tuesday with your stuff. Well done, guys. Hey, thanks for joining us today. I hope you got out. At the end of the day, prizes are good fun, and this stuff's all good fun. But what I'm really hoping is you've got one or two really good ideas and direction for this week. Maybe one really good trade to add to your week, and you've got that. It's been time well spent. Take care, guys. See you later. Have a good week. Remember, stay calm, make good decisions. So it all works out. See yous.